Huh? You get it? Who gets it? Anybody get it? Oh, come on. Welcome to the Closing Beat, everybody. Happy 21st night of September. Come on, every year we do this, man. Earth, Wind, and Fire. It's good music. Also, Serpentine Fire, one of my favorites there. How you guys doing? What?
Am I muted?
You know, you right there, man. There you go. You don't want people to hear you? Oh, all right. Well, sorry you feel that way. Welcome, everybody. It's the Closing Beat, a show to talk about the stock markets here. We are financial advisors, show sponsored by Jazz Wealth, right? We should say that. Sponsored by Jazz Wealth. Hope you're having a good day and you're enjoying the stock market pullback. Isn't it kind of interesting how this year has played out exactly like the averages, even on a month-to-month basis? August, right? We had the whole year. We've shared that data with you. You got September. It's like, oh, it tends to be a little choppy in the first half, but watch out for that second half. What do we have? It's like perfect, right? And I love being able to share that with you guys ahead of time. So when it happens, you go, that darn September, man. That'll get you that second half. You'll never forget that, will you? Pretty cool. While other advisors are playing checkers, we are playing chess here with, of course, things like that. But also, we have a client that says, I'd like to know about the series of equal periodic payments. I need to get that done. They're under the age of 59. I said, whoa, got some issues here. Going to need to spend some money. Do you know about the series of equal periodic payments, the exclusion there in your IRA? We're helping them out with that instead of just saying, you're out of luck, man. 10% penalty and all that good stuff. So really cool. Okay. There's not a lot to talk about stock market-wise because we can clearly see what's happened here. Here's the S&P on the screen here. First half of September. Okay, whatever. Not much going on there. In the second half, yeah, all the way back down to these lows here and working its way even further from there. The real key, I've been pointing this out to kind of show the difference day to day, but the real key is if you look under the surface. So under the surface of the market really has been given the overall story. So the S&P basically today started weak and found no buyers. We had a little gap down, every little tiny attempt to rally just smacked right back down, and then the sell-off into the close there. We are now about 6% off of the highs, right? Yeah, we're about 6% off of highs there. But if you look under the surface, there are 353 names in the S&P 500 that, or you could say 70% of the S&P 500 has pulled back 10% or more. So under the surface, stocks are weaker than the index. Why does that happen? Well, you guys are no dummies out there. You know, it's because the 7 stocks that led us up here did all the heavy lifting. Everything else wasn't quite going along at the same pace. So when the market falls, these guys fall a little bit. You get a day like today with the uniform kind of across the board selling, and they were already weak. So they just get a little weaker. Isn't that crazy? 353 names in the S&P are weaker than the market. That's the majority, right? By far the majority there. If you look even further, 250 names, we could do some easy math there and see that that's 50%, but 250 names, or half of the stock of the S&P here, has pulled back more than 15%. But it's just a little pullback, like from highs. You get what I'm saying? Like, okay, this kind of sucks in here. But from the high to here, yeah, you got just over 6%. If you use the SPY, right? So that's not a big deal. But half of the market is down double the amount of the index, right? Down 6% in the stock market. Half of the market is down 15% or more. Really interesting when you look under the surface. Now, today was pretty much a consistent, broad, very even, uniform selling pressure throughout the day. In a way that we can see that, we can look at the individual sectors and just plot a few stocks in each one of them, not cherry picking them, just looking at the bigger holdings inside of each sector. Basic materials down, communication services down, but we had a little Disney help and some Comcast help in there. Consumer cyclicals, or whether you say consumer discretionary, right? Defensive stocks, industrials, you just look across the board. UNH sticks out a little bit, but all of its gains were erased by Eli Lilly and Novartis. So across the board, if you were to blur your eyes, remember the game we played the other day? Blur your eyes and take a look. What do you got? Yeah, it's just a bad day across the board. There's not one thing that sticks out. We can't blame this on 1 or 2 stocks. We can't say it's earnings or things that have to do with the government shutdown or whatever. Just broad across the board, people said, I'm not interested in being in this stock market right now. If we look around the NASDAQ, now about 7.5% off of highs. Under the surface, the same thing is happening there too. Under the surface, there are only 17 stocks in the NASDAQ that are not down as much as the market, meaning they're holding up a little bit better. 17. So the same concept is here. We have those bigger names that help lift the tide. We always say, what happens when those guys stop doing the work? Everything else was weaker than the overall index there. The Russell 2000 to me is the most interesting here. After breaking these lows here, we're now down to about 10% off of these highs. That's a healthy pullback, and that's worthwhile of starting to take a look. Lucky for our clients here at Jazz, I'm a bit of a small cap nut, so I like looking at this stuff, and that is the index to be looking at right now. 9 of 10 stocks have also fallen 10% off of their highs, right? That's awesome, right? Because it means you have a lot to choose from. So if you're an index type investor and you say, well, I like a discount, I like the Russell 2000, fine, okay. You got an even index that's pulling back. If you're more of a stock picker and you're like, I like a good discount, I'm sort of heavy on tech, it is my thing, maybe that's what I like, maybe you go digging through the NASDAQ. If you're like, I like the S&P, but I don't know if I want to buy like the index here, you have 353 names that are trading cheaper, price-wise, trading cheaper than the performance of the S&P. Really, really cool, I think. All right, moving on here. We have Wine and Wealth tonight. If you are a client of Jazz Wealth, we're going to go through the performance of our portfolios. We're going to dig through each and every single one of them. I will, of course, take your questions. We'll share everything like we like to do there. Haven't done that in a while. Life has gotten busy. So we're coming back to that. We'll go over the portfolios. You can join us at 8 o'clock if you're a client in the your portal. Just go on in there. You'll be able to see us live. Okay. What about the Fed? Is that it? Were we done with rate hikes? No, they actually told us yesterday, we're going to do one more. We see every reason to do one more rate hike in one of the 2 meetings that are left. So they left you hanging there a little bit. But we know that things change when the cycle of raising rates stops. Right? I've shared housing prices with you in the past. What happens to home prices when the Fed is raising rates, and then they just stop and say, well, let's see how this goes. Right? Well, what about the stock market? There's only a handful of Fed tightening cycles that we can look at to get that data, but we can look at the data and see how this goes. So let's take a look. Here is the S&P 500 performance after and just before the end of rate hikes, right? So the zero line that you see right in here would indicate the official last tick higher from the Fed funds rate, and that's it. That's where we're starting. Here's what the markets did before that. General performance, really not a whole lot going on there. And if you look at the orange line, yeah, it shows up pretty good. If you look at the orange line, that's the average, right? So we have all of them plotted for you, and then we have the average. So leading up to the end of the last rate hike, the market kind of feels like it's coming, right? It's like people are just sitting there waiting. The average performance is very minimal, slight down, maybe a little bit. I think it's like 0.2% or something. Nothing really to get excited about. You have your outliers and everything, but that's the average. After the last rate hike, the average move going forward, 3 months, 6 months, 9 months, 12 months, right? It's a slight positive there. There's only one time in history where 12 months later, the stock market was, or the S&P was lower. And I think, you know, those of you that were around can probably guess why that was. Other than that, generally speaking, even though there's a very limited number of data points, and I do agree with that, generally speaking, after the Fed stops raising rates, that's positive for the market. Why would that be positive? We just raised rates. Aren't we like raising rates into a recession or something? Yeah, that could be. It's very likely. But the reason that is because companies that make up the S&P 500 now have a number. They know how to adjust their offering. They know how to adjust their balance sheet. They know how to adjust their borrowing, right? They know what to do because rates are fixed. How difficult would it be, even just a year ago, to try to decide whether you want to borrow now or, you know, how should we handle this? Should we sell equity? Should we be expanding? What should we do? It's very much the same thing as you'll see a company that's like, oh, we're getting sued, you know, by somebody they're suing us for $500 million. Well, it doesn't often play out to $500 million, right? So the stock is wild, I don't know what's going on here. And then Once we find out, hey, they've reached a settlement, and the settlement is $228 million or whatever it is, the stock goes higher. Why do stocks go higher on settlement news? Because we know the number. We can now factor into their total financial lives how that's going to impact, next quarter and the quarter after and things like that. So when it comes to the Fed, we now have borrowing rates that, well, we don't now have that, but we will get to a point where we have borrowing rates that are fixed. Granted, they may be a little higher than expected, but they're fixed, and now people can make decisions about how to raise money, how to deploy money, how to borrow money. So a little bit of a side lesson there for you, huh? Elsewhere around the market, you got crude oil really not doing a whole lot here today. You got rates unfortunately hitting new highs. That is a massive move in the bond market here today. You probably saw some headlines or something like that. That's true. That's true, unfortunately. Not really the most exciting thing. And the VIX up about 8% again. Remember last week? Earlier in the week? No, Friday was up 8%. Again, basically up 8%. So volatility starting to wake up there, which is normal. Right? Right? We've been through all of that, so we know that's not a big deal. All right, let's go through some stocks in the news here today. I'll take your questions, and then I'll get on with it for our Wine and Wealth here tonight. Looking forward to it. Always love doing the Wine and Wealths. All right, so let's go over here. First up is FedEx. We happen to own it, so I'm happy to see it's having a good move here. Today, 4.5% gains there. It was a strong beat on earnings. I did look into this one a little further because we happen to own it there. Interestingly enough, ground shipping. Ground shipping was where they saw their margins improve. Express did okay, but ground shipping up from 10% to 13% there. And you can tell that was the reason that the market or the stock went up, because all the analysts went in there and they started raising their margin expectations for ground and express. So it beat their expectations. They're happy with that. Stock goes up. They then raise those expectations to what will now be the new year-over-year number. So it was real easy to not have to read a whole bunch of stuff, just kind of look and go, yeah, and they all caught on to that. That's the exciting reason there. They're doing some cool things too with saving some money on their express segment of their business, but that's a different story. All right, KB Homes reports earnings better than expected. They've handled this housing market pretty well here. Average order price was up 1% in the second quarter. However, average selling prices are down 8%. That's what everybody chose to focus on there. A little bit of a rumor that started off the day here today, so you might have noticed a little volatility in Broadcom. AVGO is a ticker symbol. The rumor was Alphabet was looking to replace some of their chips, use Marvell instead of Broadcom, and Google said, I don't know who came up with that. We don't know that to be factual, or at least they're not admitting to it right now, huh? You got Cisco in the news as well. They bought Splunk, so SPL. Okay, there you go. They bought Splunk. It's many billions of dollars, many tens of billions of dollars there. It comes out to $157 a share. If you own the stock, that is at the moment, that's what they're thinking for the closing deal there. As far as earnings go, hey, Darden Restaurants had better than expected earnings, but as far as earnings go, tomorrow, there's nothing, right? Typical Friday where you just don't have anything, and it's not earnings season or anything, so not really much to go on there. And that's what we have, right? Let's see what questions you have there. You think the heat map looks like a Barbie map? TLT, I've been getting that question a lot. What do we think about TLT? Is it now the time? Take a shot in there. I don't know how you could buy a falling knife there myself, and we still know of at least another rate hike coming in there. The bond markets have now priced that in, so you're seeing that impact here today. So it's not like you have to wait for the Fed or anything. So I would tend to agree that if you like a discount, you're getting it there, provided, or you're kind of hoping for more weakness so that they have to cut rates next year, but you got plenty of time on that one. So if home starts are falling, do stock prices follow? As usually occur after the market bottoms before a recession is declared. Stock markets always fall ahead of recessions and bounce during recessions. Did a great class on that one. That was one of my favorite ones. Hey, Dustin, what do you think of buying Roku at these levels here? You're going to take a shot, huh? So they bounced off lows. Obviously, it's been a while. We've looked at this one here. You like the short-term pullback. However, so if things are getting weaker, and you think that the economy is going to slow in some fashion there, if you think that that's going to happen, do we want to be messing around with some of these more speculative names that kind of hit or miss on, how much they're going to lose? They lose money, by the way. But do we want that, or do we want more of what we see people moving to? You see people moving to the tried and true, maybe not the aggressive growers, but the tried and true, like they make money. They just make money. Maybe they make a little less, a little bit more, but these are the bigger companies that make money. You seeing that. Why would Roku fall so aggressively there? So you kind of probably want to question that. In the short term, if you're just trading it, who doesn't love a good pullback, right? Tom, do you expect a small relief rally tomorrow after gapping down today in such a big sell-off there? Statistically, that is normal. When you see a big sell-off, the next day at least starts positive. We'll see. I guess the only news things that could get in the way is maybe some shutdown stuff, but that all happened earlier today, so that probably doesn't have any kind of impact there. So I would agree. Do we have a Guess the Dow leaderboard? Yeah. Can we take a look at the Guess the Dow leaderboard before we go?
Yeah, your leaderboard there is Jamie, Lori, Catherine, Hannah, and Ram Kuma. That's your top 5 for Guess the Dow. And actually, someone asked earlier, there can't be that many people lower than these 5, and that's correct. There's only a few people below. So if we have a pretty big dip tomorrow, there's not many people there.
Oh, so the lowest person could be the winner.
Yeah.
There's always somebody that guesses 11,000 or something.
I actually went to go look to see if anybody did that. We usually have a $1 Bob guy, but we didn't have that this week. Everybody just kind of had a normal guess. So
wow. Yeah. So can we try one more thing? I'm gonna go like this, and then I'm just gonna go like this. Yeah. I got the piano keys there. Clever.
That's right.
Smooth. I like it there.
Entrance.
9. So everybody in the 9s and the 7s there. So all right, that's going to be maybe a little bit shifty as we get into the last day of the week potentially. We'll see. Think about this though. Oops, I'm going to go over here. Think about it's Friday. Would you expect to see a large move tomorrow? Right? We've had a rough week. There's things going on, government shutdown, strikes, and blah, blah, blah. Would you expect to see people buy tomorrow, in an aggressive way? It's Friday. Who knows what can happen over the weekend? I think I'll just spend a bunch of money buying stocks on a Friday and hold it through the weekend. It's not normal. So a big recovery rally tomorrow would be purely news driven, and I just don't know what that is. So, yeah, we'll see. All right, I'm going to wrap it up there and get ready for Wine and Wealth here tonight. Hope you'll join us. If you're a client, you've been maybe checked out for a little bit, you want to come see how the performance is going of your portfolios and all of our various funds. Of course, we're going to go through those for you tonight, as well as stick around and answer any questions that you guys may have. You enjoy the rest of your day. Thanks for watching. See you later.